today I wanted to kind of talk to you guys about, again, just going back to the 50s, right? Who here has adopted the 50s in your trading? Who here can see them? Who here uses them? And who here has come to the conclusion that this is incorporated in your trading, right? Like it is ingrained in your trading. We got a lot of yeses, Okay. I love that. I mean, I've done enough classes, or I've shown you guys enough to be like, hopefully I've shown you guys enough to be like, okay, if you haven't incorporated them as one of your things that you do in trading, you should, right? Or maybe you haven't, maybe you're still learning, you're in the learning process of adopting that into your trading, but you really should adopt it into your trading. So the next question that I've never really talked about was, if you have gone to the point where the 50s are just naturally part of your trading, and you see them, and they're ingrained in your trading, why do you still lose, right? And it's not a question to say you're going to win every single time, but why do you still lose? Why do you take losses? And again, in trading, I'm not trying to say that you're going to win 100% of the time that you sit down by trading the 50s. But if you look back at your trading after you're done and you take a loss and you look through it through the lens of the 50s, you probably would say to yourself, oh, I see what I did there. Would you guys agree with that statement? If you went back and studied your losses, you could say, oh, I see what I did there. Now, the question is, what did you do there? And I'm pretty confident that the answer is going to be the same for a lot of you guys. Maybe not all, but I'm pretty confident the answer is going to be the same for a lot of you guys. What did you do there that you should not have done that would have caused your trading to be profitable, not take a loss? BTP. Yeah. What was I think you meant to say trigger? Chasing. I think MK, you actually said it best. Willy-nilly. I think MK, you said it best above before even distraction or range trading. Now, I don't know necessarily the distraction, but I'm gonna say that the distraction is not, again, maybe you're referencing distraction of like you're distracted from trading and from outside world, but I'm saying the distraction inside of trading might be tunnel vision, right? Might be the distraction of the market is moving right this second, and so I need to jump in on that current move versus taking a step back and seeing where it's going. Case in point, just on this last move that we were looking at, got my annotations, we were down here trading, and I'm like, I added in a ton of trades for the exit here, but I also knew it was coming to the 50. So if I knew it was coming to the 50, did I really need to add this many trades in to get an exit here? Well, no, the market says you don't. You just need to be patient, right? You just need to wait for it to get back to the 50. And sometimes this can be a distraction, right? Like if I didn't get out here and it did make this the 50, then I wanted to do that, and that's the reason why I did it. But the higher probability was it was coming back to the 50 of this. You just didn't know how. You didn't know how it was going to do it, but I was like, I'm pretty confident it's going to do that, because it doesn't make sense. It does not make sense for this to become the 50, right? If you look at it and you did an equal distance move, jump over here on the 5 minute, line this out. It just did not make sense for it to make the 50 here and do an equal distance run that would put it would break this, it would break that, and it'd do that. And the EU doesn't generally move 120 pips before it gets a pullback, right? So the higher probability was it's going to come here and make this the 50. And that's exactly what it did. And I think that what happens when we take a loss between here and here, between it getting to the 50 of this move, is we get in too heavy and we can't wait, right? I think this is, again, if I was playing Family Feud and they asked me for the number one answer of why traders lose without waiting for the market to get to the 50, I believe that this would be the number one answer. Correct me if I'm wrong, but I think this is the number one answer. Is they're too heavy, so they can't withstand a move against them. They need it to be all in their favor, right? And just so happens that it did, because it's a news event. But I think this is the number one answer as to why traders can't withstand runs to the 50. And if you're just trading the euro, which is what we do 90% of the time, it does not move 100 pips in one direction without a pullback to the 50. It just simply doesn't do that. Has it? Absolutely. The probability of it doing it is low, but the possibility of it doing it is still there. And in traders, we just take the probability. And I have always said this, and I'll continue to say this, that if you have really bad PTP and you get in trades, then it goes 100 pips against you, because you got to have bad PTP in order for it to be 100 pips against you without pulling back to the 50. Then you got caught in what I would consider a 20% market, and you should take a loss there. But it doesn't do that. It can, but you should take a loss. But this loss shouldn't be a blown up account. It shouldn't be, because you shouldn't be that heavy. But sometimes it is, because we keep stacking in, or heaven forbid, I don't know, Lee's here, willy-nilly trading. Don't do it. Don't willy-nilly trade. Don't do it. Don't willy-nilly trade. And then that's just adding in, right? So trade with a purpose. Whenever you start your trades, have an end in sight, right? But I wanted to kind of show you guys, like, what if you took this to just played the 50s? I don't know. It's like we're gonna explore this together. Joel, you hit me up and asked me how do you do that. William's done a bunch of that on the road to 100, on showing people how to do back testing. I showed that yesterday in our hot seat class, so there's a video there. All right, so we're gonna play a game of just 50s, right? And we're gonna play a game of 50s of the last move on larger time frames. And because we have the luxury of this being a not real account, we're going to increase our lot size to acting like we're just getting into an early game trade. So we'll trade with 10 lots. So again, 10 trades for me is early game, so equals one lot trade. So we'll go 10 trades. All right, so looking at the chart right now, in fact, I'm probably going to jump to next day open. We'll do that. Looking at the chart right now, where if we were to enter, what are we entering and where is our exit if we're just playing the 50s? If you guys said that this was the 50, you're right. It's right here. Okay. So it's the 50 of this move right here, of this entire move. And I probably play it to the top to the bottom on the larger time frame. Now, we can measure this out, see how far that is. Holy cow, that is tiny on my screen. It's about 45 pips, right? So if I get into a trade right here, my exit is here. And I want my exit above this, right? So I would put a sell on here. Now, just keeping things super simple, get into a sell here. It's like, why did it go all the way down there? That's super weird. All right, so we're in a sell right here, and I would put my take profit, if I was just doing a simple trade, right here. And that's 1.5% right there, right? 1.5% right there, roughly. Now, what is the probability and what is the possibility of it coming down to the 50? There's two things here. We all know what it should do, and it's come down to the 50. But what could it do?
Break this.
Go the other way. Or it could break through the 50 and keep going.
Could make that the 50.
There you go. Simplify it. It could make that the 50. It could make this the 50. So those are the only two conclusions that will play with just playing the 50s. It'll either A, make this the 50, or B, come down and hit the 50. Right? Those are the only two possibilities it could do, and there's a third, which is it could fail to hit the 50. But if it breaks this, you guys should be securing your trades anyways, right? Because if it fails here and it comes back the other way, you want to be out. But that's a technique, not market structure. So if according to market structure, it should come down here and hit the 50. Would you guys agree with that? Agree with that statement? That's what it should do. So if the probability is good the possibility that it makes us the 50 is not as good, particularly because you're in a major outside range right here. You're in a major OSR right there where you have no data over here. So it could do that. And if it does that, well, let's see what it does actually. So if you just get into one trade and you're out. And just like that, one candle, 30 minutes, you're done trading and you're out. Okay, let's do it again. Now, with price being here, what's the next move? This one's a little bit trickier.
It could come back to test here. Let's see if it closes
Is that a gap?
low here.
I think it is a gap. It's a weird one because why would it gap? Why would it gap there? But yeah, it's a 30 minute. We're playing on the 30, right? So this one's a little bit trickier because this is an easy thing to read. This is the 50 right here, right? So it's easy, makes it easy for us to say it should come down to here. But now that it's here, well, the possibility and probability are a little bit closer together because you could say, A, it's going to come up to here and cut that 50, or you could say it might make this the 50 and come all the way down to here. And this becomes 50-50 at the 50. And then you bring in all your other information, such as, is that the gap? It should come back and close the gap. It should close the gap, but it could still make this the 50. So the question becomes, are you buying or selling? And the answer is, I don't care.
Blowing in the wind.
Don't care. So this is one of those times where you could do either or. So what are you going to do? Who leans more to who would want to buy here? Put a Y, put B or S in the comments for if you're leaning buys or you're leaning sells.
And not just BS.
Yeah, MK put that in already. He's like BS.
Sorry.
Okay, so I like the fact that everybody's buying because look, the pressure is up.
Yeah.
It came here to this channel, and there's a gap that needs to fill. So the higher probability is that it's going to pull back to the 50. Now the 50 of this move right here and this move right here is right there. So did it already hit it?
Yeah.
Did it already hit it? And A, did it already hit it? And B, if it didn't, is there really enough meat on the bone to get in for an exit here?
How many pips is that?
And if you're not, and if you're buying right now, isn't that bad PTP?
Oh yeah. We need to wait a little bit.
But if you wait a little bit, it could make this the 50. If it comes right back down to here, make that the 50 and come down to here.
That is a 30-minute candle. You can search the entry on the 1 minute chart.
Agreed. We're not playing the 1 minute chart. I'm trying to say just get into one trade and play 50s. That's the exercise that we're doing right here. One trade, 50s. Maybe not one trade, but one starter trade on a long-term chart.
Yeah, in that case, if I'm feeling buys, I will wait for the 50% here retracement and then put the trade here instead of buying like now. Wait for the pullback on the 3, wait for that 50, put it there to continue up. If it fails, then you can fix it. You have fixed it point like this 50 and this 50. Okay, and you got like 3 trades only.
All right. So with this analysis, are you still buying or selling? Put a B or a S. You still want to buy or do you want to sell? Joseph, thank you for sharing that. But if I'm looking for an exit for buys, I'm getting into a sell down to here. Then I'm getting into a buy up there. You're missing the sell opportunity if that's what you think the market's going to do. This is a good exercise because you could take it 2 different ways. First of all, this is not max profit up here. Under here is max profit because it closed the gap right here and it probably is not going to break higher. However, it dropped down for a reason. We don't know what those reasons are. We do have news coming in, manufacturing coming in. But for me, the path that I would take is actually sell. I'd be selling right here, even though I know there's a good chance to close the gap. I'll just put another sell on here and get my exit here. And if I'm right that it's going to continue to come down to here, then oh well. But there's more reward down here than there is up here. So I'd try to build into a position, just playing the 50s. But that's me. I don't think it's, to me, it's, I don't care. So the exercise that I want to do, and we'll rapid fire a few of these really quick. The exercise that I want to do is just like playing the 50s. So it came down, hit the 50, you are 50, 50 at the 50. If it comes down into this area right here, are you breaking this channel? No. If it comes up here and comes up to here, are you breaking this channel? No. So you're still playing inside the channel. So now it becomes risk versus reward. Add a sell here. If you add a sell here, your reward is greater than adding a buy here, because if you add a buy here, it's bad PTP because we've already pulled back to the 50 of this move. It's just bad PTP right here. So hence the reason why I would be throwing on a sell right there. And my exit for this sell would be here. Well, not here, but here above this. I'd put my take profit right here. Our exit is at the 50, or it makes this the 50, and I really don't care. If it makes this the 50, then I wait for a equal distance move of this to here, down to here, and this is my next ad. So Travis, why would you say that this is the 50? Again, this is just going back to your question that you just asked me. So if we were playing the break, would this be the 50?
No, and that's no, that would not be the 50. If we're playing the break, well, then the 50's here.
Yeah.
Well, yeah, a little bit lower. But.
So it goes back to your question of if you play the break, you play the break and it's an outside range. This is not an outside range, so I'd play the move, right? Because this is a pullback to that point, so I'd play the 50 of this move, the entire move right here, which puts it right. And I would probably play this area because if it crosses over here again, it's probably coming down to here, right? So I'd play the 50 of this entire move right there.
Okay, okay, this clarifies a lot. So I need to start looking outside ranges and within market structure. This helps me out a lot. Thank you.
Absolutely, right? You need to be able to, and that's something that I think we actually did on your very, 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 very first boot camp that you and I ever had, was identifying the 3 market types. Remember the range, the trend, and the outside range. And then there was 3 things going back. Then once you identified what market type it was, then you identify the 3 things that you do in each one of those. Do you remember that conversation?
Yeah.
It was a long time ago.
Yeah,
it goes back to that, right? The first thing you have to recognize is, are we in an outside range? And if we're in an outside range, you don't trade the 1, 2, 3s like you do if you're in a range. And it's the same principle. In an outside range, your 50s are from the break. In a range, your 50s are whatever range is. In a trend, you play from the top and bottom of the apex to the nadir in a trend. Does that make sense?
That does, yeah. Yep.
So that could cause confusion because the 50s are slightly different depending on what type of market structure you're in. But it's still 50%. It's just where you start and stop your calculation, right? It's just
Correct.
where you draw your lines, right? So, so again, now that we've gotten this done, it's either going to A, make this the 50, or B, come back to the 50 of this move right here. And if you have 0 trades on, it does not matter what it does. And then you try to take the higher probability and the path of least resistance, right? And if it makes this the 50 and you're selling here, that's probably going to come up to here and make that the 50. If it turns and comes back down to the 50, there's a good chance it could come all the way down to here and continue its selling pressure. So again, this is a great place to sell, but this is not a good place to sell. This is not a good place to sell. If you're already in a sell, this is the next ad that you would do up there, right? That's the next ad. All right. I think I'm done mentally, physically, emotionally. Stick a fork in me. I got anybody have any questions? I can answer those. Those are a lot easier than formulating words by myself.
This was a very good class, David.
Have a happy 4th, everyone.
Speaking about that, we had a big firework hit my trailer last night I was asleep because I go to sleep early, but it was like midnight and it hit my trailer and boom, shook my trailer.